If you are in this 24% of Canadian mortgage holders, you need to be aware of the sneaky trick that a lot of mortgage companies are putting into their contracts to try and extend your amortization period. Mortgage companies will tell you they are offering variable rate contracts with fixed payments, which means you don't have to worry about your payments increasing, especially in the current interest climate. What they aren't telling you is two major things. The first is that while your payment is not changing, the amount of your payment that goes towards interest does, meaning you are paying off less of the principal with each payment and increasing your mortgage length. The second thing they are not telling you is that a trigger rate exists. This is a rate at which your payment will suddenly jump, meaning that instead of being able to slowly adapt your spending to deal with increasing rate, you suddenly have to deal with a massive payment increase with no forewarning. In the current housing and economic climate in Canada, especially in the lower mainland of BC and in southern Ontario, the ability to afford a house on a fixed mortgage requires a higher down payment than variable. It is also highly likely that you will qualify for more money with a variable rate mortgage. This happens because you are required to be stress tested at the offered rate plus 2% or 5.25%, whichever is higher. This means if you are being offered a 3.75% variable rate mortgage, you need to stress test at 5.75%. But if you are being offered a 4.6% fixed rate mortgage, you need to stress test at 6.6%. A stress test means that 39% of your current income needs to be able to handle your mortgage if you are paying interest at the stress test percentage. Out of all the mortgages in Canada, 70% of them are fixed rate, which makes sense given the relatively low interest rates that have been available over most of the last 5 years. The vast majority of Canadian mortgages, while amortized over 25 to 30 years, only have 5-year contracts before they must be renegotiated. Those who picked up mortgages between January of 2018, when the prime rate climbed to 3.45% and continued to climb to 3.7% in July and 3.95% in October of 2018, might have received better offers on variable or required the extra capacity to afford the house they wanted. They would make up the majority of the 30% of variable mortgage holders. 80% of variable mortgages are what's known as an adjustable rate mortgage. This involves a locked payment and a trigger rate. Comment down below whether you have a fixed rate, adjustable rate, or true variable rate mortgage, and don't forget to hit the like button while you're down there. For someone with a $500,000 mortgage who has an adjustable rate mortgage signed at 3%, they would be making payments of $2,371 a month. If their trigger rate is 4.5% but rates rise to only 4%, they would be paying an extra $250 a month in interest. But remember, their rate doesn't change. So they are just losing $250 a month in paying down their principal, and instead that is just pushing their overall mortgage length further and further into the future. Imagine experiencing that rate increase 1 year into your 5-year mortgage, followed by 4 years of unchanged rates. You would miss out on paying $12,000 in principal, and instead all of that money would be charged as interest. This could potentially extend the length of your mortgage by several years unless you make lump sum payments to catch up. That's one nightmare scenario. The second nightmare scenario is what happens to your $2,371 a month mortgage payment when you hit the trigger rate of 4.5%. Suddenly your monthly payments have jumped over $400 to $2,779. For anyone who is living paycheck to paycheck and struggling, that's a devastating blow that can be hard to adequately adjust to. If you're hunting for a mortgage or looking to renew your mortgage, the most important thing you can do is avoid variable rate mortgages that contain a trigger rate contract. If a mortgage broker or mortgage provider insists on you taking a product that functions as an adjustable rate mortgage with a trigger rate, shop elsewhere. This will help your planning and budgeting substantially and make your home ownership a lot more comfortable. If this was interesting and helpful information for you, please check out either the Real Estate Shorts playlist or the Daily Finance Tips Shorts playlist in the boxes, and don't forget to subscribe.